Hello there, I'm Kanye West. I know what you may be thinking, what's a petty cash fund? Well, let's get some knowledge up in this bitch. Petty cash is the small amount of cash on hand within a business which is used for small scale expenditures and is treated as a current asset. The exact size of the petty cash fund allowance ranges from company to company. It offers a convenient alternative as a cash control in instances where only a small amount of cash is required to be spent or when the use of checks are burdensome. Quite irrelevant, but a fun fact nonetheless. A person responsible for the petty cash fund is known as a petty cash custodian. Now, there are a few steps in order to utilize petty cash funds. These include establishing the fund, making payments from the fund, and replenishing the fund. Let me introduce to you the subjects of our video today. The French-inspired fashion company Kimye in Paris, formed in the month of June 2016. To create a petty cash fund for use, we must record a journal entry to record its creation. In order to compensate for their luxurious company policies, they require a petty cash fund of $1 million for small purchases. The journal entry should read as follows. The accountants in charge of Kimye in Paris have appropriately debited petty cash as it is an asset in this case, and have credited cash as we are reducing an asset whereby the normal balance is a debit. As always, these entries must balance. The step in the process includes making payments from the fund to purchase goods and services. This occurs in two ways, cash taken from the fund and to seek reimbursements. The petty cash custodian, as mentioned previously, is in charge of accounting for all payments made from the fund. Journal entries are not recorded for payments as they are made. Instead, expenditures are accounted for as the fund is replenished, all within the same day. Which now brings us to our third and final step regarding petty cash funds. The petty cash fund must be brought back to its original balance for future use. As we can see in the journal entry, we've recorded the expenses in the debit column and credit the amount of cash that needs to be put back into the petty cash fund in order for it to be the original amount of $1 million. This is one of the many common easy examples of petty cash use. However, let's say Kimye in Paris accounts for another $50,000 in college dropout expenses. This will bring our expenses total to $450,000. But let's say hypothetically the amount missing from the petty cash was hypothetically $350,000. The cash over and short rule is used in order to account for discrepancies between the cash needed for replenishment and the amount of receipts acknowledged. The journal entry would read as following. In this scenario, the journal entry debits and credits are not equal, and the Kimye in Paris accountants must find a way to balance the books. This is where the over and short journal entry rule comes in. Petty cash over and short is used to ensure the petty cash amount is always brought back to the original balance using this simple rule. If cash is less than expenses, credit cash over and short. If expenses are less than cash, debit cash over and short. Using our guide, we can see that cash is less than expenses. Therefore, in this instance, we credit cash over and short tool with the cash entry in order to balance out the expenses. In the next scenario, whereby the graduation expense never occurred, we are able to apply the cash over and short rule where the Kimye in Paris' expenses are less than cash. With Kimye in Paris' expenses only totaled to $300,000, the cash over and short rule accounted for the additional $50,000 needed to balance the books. Thank you for watching. I hope you learned something today about petty cash funds.
Created using Powtoon.